does the Dow Jones Industrial Average work as an index? Imagine trying to get a quick snapshot of how the big companies in the United States are doing all at once. That's what a stock market index like the Dow Jones Industrial Average helps us do. It's a number that shows the overall health of some of the largest and most influential companies in the country. But how does it actually work behind the scenes? Let's break it down. The Dow Jones Industrial Average is a type of index called a price-weighted index. That means it doesn't look at how big a company is in terms of market value, but instead focuses on the stock prices of its component companies. It includes 30 major U.S. companies, mostly from industries like manufacturing, technology, and finance. When one of these companies' stock prices goes up or down, it affects the index. To calculate the Dow, you add up the current stock prices of all 30 companies. Then, you divide that total by a special number called the Dow divisor. This divisor is not fixed. It gets adjusted whenever there are corporate actions like stock splits or spin-offs. These adjustments keep the index consistent over time, so it doesn't jump around just because a company changed its stock structure. For example, if the total of all 30 stock prices is for $1,000 and the Dow divisor is about 0.16, then the index value is calculated by dividing for 1,000 by 0.16. That gives us 25,000 points. When a stock price changes by $1, the index moves by roughly 6.15 points because of the divisor. The Dow updates constantly during market hours, reflecting real-time changes in stock prices. It serves as a quick gauge of how large, well-known companies are performing overall. Traders and investors use the Dow to get a sense of market trends, and many options and futures are based on its movements. Because it's price-weighted, stocks with higher prices have more influence on the index than lower-priced stocks. This means a high-priced stock like a $30 share impacts the index more than a lower-priced stock, even if the lower-priced stock has a bigger overall value. This can sometimes make the Dow less representative of the entire market than other indices, like the Standard & Poor's 500, which are market cap weighted. In summary, the Dow Jones Industrial Average works by adding up the prices of 30 big U.S. companies and dividing that sum by an adjusted number to keep it consistent. It's a simple yet powerful way to see how the stock market's biggest players are doing at any given moment. It's used widely by traders and investors to track market sentiment and to base trading decisions on the overall market trend.